The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Mark Ramaekers here with Insurance Agency Marketing Services. We also have along with us here this morning Chris Martin, who's Regional Vice President for John Hancock Life. Welcome, Chris.
Thank you. Good morning.
Thank you for taking time to help us out here this morning. So this webinar, what we're going to talk about is some of the great products that John Hancock has along with their long-term care rider. And, you know, one thing sitting here every day, I wouldn't say a day goes by where I don't have an advisor asking about a life product that has a long-term care feature to it. And if you look at the statistics, I'm constantly looking at that because I see that from a long-term care standpoint, that individual sales are going down, and as far as a standalone long-term care, where the hybrid life sales are going up. So this is really truly what seniors are buying today. They're kind of beyond this. If I don't use it, I'm going to lose it type of a fear or philosophy. And so with these products we're going to talk about today, they have no fear of losing anything. Whatever they don't use goes to beneficiaries tax-free. So that's what we're going to talk about here this morning. This is a recorded webinar, so this will allow you the opportunity to review the webinar after I email it out to you as often as you like. And of course, we have the question box open as well, so you can type questions in there. We'll address those as we go. And then once the webinar is over, you can call us anytime for help with a case or questions. So without further ado, let's go ahead and get going here. I'm going to go through a few things, what we do that I believe are unique to the industry as far as IMOs are concerned. We've been in this business now 33 years and going strong. One of the things that has helped us to grow our business is our referral program. So just like you'll take referrals all day long. We will as well, but we're going to pay you for the referrals you send over to us. So if you send us an agent, they get contracted, we're going to send you a check for $50. Every time they write a piece of business, we count that. And you'll see here as an example, if you're looking at single premium life or maybe annuities, is 20 basis points on what they write. At the end of the quarter, we send you a check for their production. Now, you're not taking a reduction in commissions. They're not taking a reduction. You're not in the commission business. This is just our way of saying thank you for the referral. And that will continue as long as that individual is writing business. You can have as many as you want. In fact, we have advisors that are collecting over $10,000 a year on the referrals they've sent to us. So keep that in mind. We also have something which is pretty unique, is our market reimbursement. This is something I really would have enjoyed in the field, but every time you write business, so let's say you write $100,000 in single premium life annuities or $10,000 in target life, we put $100 into a market reimbursement account for you. That sits there until you're ready to use it. And how would you use it? Well, you might be buying leads, you might be hosting seminars, you may have a quarterly luncheon or a customer appreciation. When you send us a receipt for whatever you're doing to market or, obviously support your business, we turn around, we send you a check for 50% of whatever that expense is. So let's say you're going to have a back to school deal. Obviously, everybody's already there, but let's say you spend $1,000 this month, you send us a receipt. We send you a check for $500. So it's a great way to get a partner in covering the expenses in your business. Now, we also do something for our new producers, and I see that there are some new names on here today. And what we do is we got a three-tier approach to this. So if you decide that you want to redeem your points at the first level, you can pick up $750 in cash, or you can get to your website set up. We can have that up and running for you in one business day. Our creative department is very good at that. And you could also buy into that as well if you don't want to wait. Then there's the iPad option. The next level, let's say you wanted to wait till you got to the 300,000 level. This is an opportunity for you to either pick up the Social Security program in 3,000 piece mailing, or you can get 2,000 marketing reimbursement dollars or $1,500 gift card. Now, some of our advisors, they just buy right into the Social Security program, and you can certainly call and ask for marketing. We can give you some details on that. You might wait for the last level, which is the 500,000 level. Maybe you've done seminars in the past, or you'd like to. You're a good public speaker, but just not really sure how to get going. We've got a 5,000 piece mailing and seminar coaching with Matt Gill, or 4,000 piece mailing and seminar coaching with Dave Pimper. They both have a great program. They're very effective. This is what they do. They're top producers of ours. You can always buy into that, or you can earn that. Lastly, if you choose to not take advantage of either two, you can get the Ritz-Carlton Travel Rewards package, make your own vacation getaway. And our back office support certainly is second to none. We do everything from the very beginning, from calling in and asking for an illustration all the way to getting your commissions and everything in between that. So we'll run your illustrations for you, provide you all of the forms that you need. When you ask for a quote, we'll scrub the applications, we'll manage it through the underwriting process, and we also help you as far as keeping things real simple. We do everything, as much as we can, I should say, electronically. So not a lot of paper, and that includes our paperless contracting. I'll go through that here in just a moment. Our creative marketing department, if you have not worked with them, you're writing with us, I would certainly encourage you to do that, and here's why. They not only have created some very attractive brochures for you to hand out, to mail out, to do with your annual statements, what have you, but they also do a great job in branding. A lot of advisors out there haven't done anything to create a logo or brand for themselves, so our team will do that. They'll help you from that all the way to any type of social media, email marketing, whatever it is, you name it, they can do it. So I'd encourage you to give them a call here after the webinar and see what they can do for you. Our website, if you haven't been out there, it's www.iamsinc.com. And everything you need is out there to help you support your business. You may call in anytime from, say, 7:30 to 5:30. There is a person to answer your phone within 3 rings. Otherwise, if you're working before, after hours, or the weekend, everything you would need to continue to be productive is out there, including the contract applications, product details, forms, etc. So I encourage you to go out there to check out the website. A lot of advisors ask us, what type of program do you have to help us be effective in advising our clients? We recommend the Retirement Analyzer. It's a very comprehensive program that can help you determine if your clients can retire, when they can retire, and what income level. So if you want to know more about that, certainly call and ask for Marcus. He can walk you through that and see if that program is right for you. Got a couple of polls real quick here. The first one is on our IAMS Wealth. I don't know if you've ever considered maybe going out and getting your series exam. Maybe you have questions on that. Maybe you're concerned about the cost of it. If you would like to discuss that, we will help you as far as the testing is concerned. We can help reimburse you for that, cover the cost of it. Maybe you want to refer your clients over but don't want to go through the testing and get paid. You can do that as well. We can help manage those funds for you. Maybe you're curious to see if maybe the commissions or the fee structure is competitive. Anything that you can think of you might have a question on that would pertain to that, mark yes. We'll have someone call you. And here's the other thing too. The advisors that have gotten on board with IAMS Wealth have been able to make sales that they wouldn't have made otherwise because of the fact that they can now have their clients' monies managed. And so if you'd like to speak with one of the folks over there, just mark yes. I'll have someone call you at the end of the webinar here today, answer any questions you might have and discuss the opportunities that are available to you. All right, I'm going to close the poll. Tremendous response there. I appreciate that. I know the fine folks over at IAMS Wealth Management will be looking forward to following up with you here this afternoon. Okay, so moving on here, my last poll is going to be on our Life and Annuity Training Academy. Now, I don't know if you're getting any training today, but here's the way this works, and we'll move through this quickly. So I would ask you to mark yes if you're interested, first of all, in attending our last event of the year, which is in October. Maybe you have some questions, you want to look at the agenda. But what we do is we pay for your airfare, we pay for your meals, we pay for your lodging. There is no out-of-pocket expense to you at all. All you need to do is just plan on being out of the office Wednesday, Thursday, Friday. We'll get you there Wednesday evening. We'll do a few short presentations and obviously provide you a meal. We'll do a full day training on Thursday, a half a day training on Friday, get you on a plane by about 1:30 and get you home. So we cover all those expenses. What we do is we bring speakers in from across the country to show you new ways of growing your life and your annuity business. There's also, we're going to talk a little bit about product, what's hot, what's new out there. You'll hear from our IAMS Wealth team what they can do as well. So, all in all, it's just a great way for you to learn new ways of growing your business. And look at it this way as well. There are advisors that come from across the country, and there's a lot of great ideas sharing there. So super networking opportunity to find out what other top advisors are doing in the industry, and there's no out-of-pocket expense to you at all. So if you're interested in getting the agenda, if you have any questions on that, maybe you'd like to attend, we do 3 of these a year. We have our last one scheduled for, it's in October, and just mark yes. So great response there. I appreciate that. Okay, I'm going to close the pull down. If you decide that you want to know more, you want someone to speak with you, have any questions, just give us a call here and we'll get everything over to you here today. Okay, I'm going to close this. We're going to move on here. A couple more slides for me. I'm going to turn it over to Chris. We always have our marketing summit, and this year we're going to Naples, Florida. That's going to be in 2019 of August 25th through the 29th. You can see we're going to go to the Ritz-Carlton. Everything that you write with us, whether it's annuities, Medicare supplements, single premium, traditional life, long-term care, it all goes towards the point total of $3 million. And that is for you and guests. That started January 1st of this year, goes to June 30th of next year. Would love to see you and your significant other join us in Naples, Florida. Okay, with that said, Chris, I'm going to go ahead and I'm going to turn it over to you. Again, everyone, let's welcome Chris Martin. He's the Regional Vice President with John Hancock. He's got some great stuff to share with us this morning. Chris, the floor is yours.
Well, thank you very much, Mark. I appreciate that. You guys have a lot of fantastic things going, and certainly appreciate the time here today to spend a few minutes talking with everyone about some of the different things that we have going on at John Hancock. Before I jump in, Mark, can you see my screen okay? Is everything showing up?
I can see it, yes.
Okay, sounds great. Thanks. So I'm going to spend, as Mark mentioned, a few minutes just talking about here today, talking about really what we're seeing as a huge advantage to our product portfolio, and that really is our living benefits. And we have a number of different living benefits that we are really excited about here at John Hancock, some of which are relatively new, not only to John Hancock, but in some situations, really kind of new to the life marketplace. And so some of these things you may have heard about, some of you may not have, and so hopefully you have a few takeaways after the end of this presentation. And really, Mark asked me to focus as well on kind of our protection products, our protection UL and our protection IUL. These are 2 of our best-selling products, and we really wanted to show you how not only are they competitive products, but when you add then this combo of living benefits, it can really provide some great advantages for your clients, and we think some real differentiators in the marketplace. So today I'm going to start with really the 3 different living benefits that we want to touch on today are, first and foremost, our vitality benefit. So we'll jump into that first, and then we'll talk about the protection UL, protection IUL product, and then we'll finish up with our long-term care rider, and then also our brand new critical illness rider. Talk about those, how you can use those in conjunction with one another, again, to just give a very powerful product combination and kind of give you that 1-2 punch, if you will. So with that being said, you know, our product portfolio now at John Hancock is very well rounded. We think that there's a lot of great things that we offer, and you can see that we not only have great protection products, which are really what we're going to focus on today. We do have accumulation products. Our term products we've repriced 5 times over the last 2 years to really come back, and we're really now in a very competitive place with our term product portfolio where we hadn't been in the past prior to those repricings. Obviously, we do have guaranteed UL and SUL, but quite frankly, those products aren't as competitive as some other carriers in the marketplace. And that's where, again, we pivot to these other protection products like we're going to talk about today. And then finally, you'll see our suite of living benefits with the vitality, long-term care, and critical illness. Obviously, you know, we've got, you know, fixed UL, IUL, VUL, whatever the case may be. We feel like if you need a product in any of these spaces, John Hancock is definitely a very competitive offering for you as far as our product portfolio goes. So let's just jump right into it. We've been at this vitality thing now for about 2.5 years. And quite frankly, some of you hopefully have heard of it. I know some of you have probably sold some vitality products. So for that, we thank you for your business. But for those of you who haven't heard about our partnership with Vitality, I do want to spend a few minutes talking about that. But Vitality is really a rider that we can add to any of our products right now. And it really is going to help your clients who are living a healthy and active lifestyle, and it's going to provide a number of different things. The first and foremost is the premium savings. If they prove to us and show us that they are doing some of these things, for example, going to the doctor on a regular basis, going to, preventative dentist on a regular basis, getting some exercise, eating right, then it's going to save them give them the opportunity to save up to 15% in premium savings. We've also added, a lot of different retailers that we've partnered with. For example, we're the only life insurance company to partner with Apple, and we can offer your clients now an Apple Watch Series 3 for as less as $25 plus tax. And again, I'll get into some of these details. We give every Vitality member who's added this Vitality rider, we give everyone a free Fitbit, which is obviously a tracking device that they can wear to log steps and heart rate and that kind of stuff. And this Vitality program works hand in glove with any of these types of tracking devices to track fitness. We also have our healthy food benefit, which gives your clients $600 in annual healthy food discounts, and that's available now at about 16,000 grocery stores nationwide. And then we just launched not too long ago our Healthy Mind benefit that can help reward clients for doing either getting good night's sleep or potentially spending up to little 10 minutes per day in meditation. And we've got some different tools that can help them with that. And then finally, just we've partnered with other retailers such as Starbucks and iTunes and Amazon to give great rewards and discounts. Quite frankly, not only to reward your clients, but also to keep them engaged in the program. And again, after the 2.5 years, we're really seeing that that is happening. Clients are engaging more. We'll kind of get into some of that. What have we learned over 2.5 years? When we first started with this, we were the first life insurance company to bring Vitality to the United States. We did sign an exclusive deal, so you won't see any of our competitors at this time coming out with any option like this with Vitality. And what we found is that 9 out of 10 of consumers would actually rather buy a John Hancock Vitality policy over just the old type of insurance, which would be the traditional way of buying life insurance, which we still have that, and we still offer it, but we're just seeing such good things from our Vitality option that most people are adding the rider when they have the opportunity to do so. You would think that this works, well in the millennium space, which it does with millennials, working with millennials. However, older individuals, older insured, so like 65 plus, actually prefer this type of insurance as well. And you'll see that when you get into some of those cases, those can be our larger dollar amount as far as premium goes. So their discounts of 10 to 15% are actually larger premium amounts, and it really strikes home with some of our older age clients. And then you can see that 50% of people are more motivated to purchase life insurance after reading a little bit about John Hancock Vitality. So that's where we kind of just say, hey, if we at least just bring it up with our clients, whether you think they might like it or not, you might be surprised. And we're seeing that quite a few of our folks are actually wanting to add the rider. The other piece of this that's really great, and we think that this helps you as agents, on everyone on the phone here, this is going to help you increase referrals. Most folks who buy life insurance with Vitality think it is very different. It's unique. They've never heard of anything like it. And guess what they do with that? They enjoy the program. They're going to go out and tell others about it, tell them that you sold it to them, and send referrals your way. So we found that this can be a great way to build referrals. Mark talked about referrals. We all love referrals. We all love to have a referral-only business. And this, we think Vitality can certainly help with that. And then obviously just stronger client relationships. What we're seeing is the old type of insurance, and again, we still sell that at John Hancock as well, but the engagement process or the engagement piece throughout the course of a year with a traditional life insurance policy, we look at that as really there's one engagement per year. And that comes when the life insurance company sends your client a bill. That's about it. There's really no other engagement throughout the year unless your client were to reach out to the life insurance company and ask for an in-force ledger or ask for some type of a change to their policy. But with Vitality, what we're seeing is because we have an app for your smartphone, because they've got a website that they can log into to redeem rewards, all of this is very easy, and they're doing it up to 21 times per month. So 21 times per month, your client is like checking their status, seeing how many points they have on their smartphone via the app, the Vitality app. And this can just be a great way every time they're checking that or cashing in a $5 Starbucks reward or a $50 Amazon gift card. They're thinking of you because you sold this to them. And again, that just leads back to the referrals and a stronger client relationship. So at the end of the day, the program is very similar to a hotel rewards program or an airline rewards program. Clients have the opportunity to do a number of different activities that are going to earn them points. And by getting points, you can see they basically work their way up through bronze to silver, gold to platinum status. You can see how many points there: 3,500 points for silver, 7,000 points for gold, 10,000 for platinum. And those sound like high point levels, but you'll see that, having cholesterol under 200, for example, that gives them 1,000 points. So by doing a few of these things, they can really quickly start to accumulate a lot of points. And once they earn that vitality status, then simply they sit back and enjoy not only the premium savings, the premium discounts, but also the rewards on the program. I'm just going to kind of go through a really quick example of something, and this just shows you how easy it is to get to the gold status, which is 7,000 points. There's a number of online things that clients can do. They kick off the program with what we call our Vitality Health Review, which takes about 10 minutes. It's very simple. It's like they go online, they set up their Vitality website with a username and password, and then they walk through about a 10-minute survey where we ask them certain questions. Kind of gives them a baseline of kind of where they're at, and we suggest the Vitality program will then suggest different things they can do to potentially increase their life expectancy and basically help their longevity, help them live an active and healthy lifestyle. If they do all of this in the first 90 days, again, it takes about 10 minutes, so that's not a huge ask on their time. They get a couple different bonuses, and we do the physical activity review. And then if they, through underwriting, we're going to have the 4 biometrics that we're checking, which is cholesterol, blood pressure, glucose, and their BMI. Those are all going to move over because they just went through the underwriting process. They get 1,000 points for each one of those. And they get, if they're a non-tobacco user, they get an additional 1,000 points. And you can see by just doing those things, so that takes about 10 minutes, and they go in and set up their program, they're going to be at the gold status level. It's really very simple to get there. The kind of the way I put it is, it's not hard. It's relatively simple, but you do have to do something, which is we have to get them to go online and just take this 10-minute VHR. So that's all included in the delivery packet, I should say, when you sell a Vitality policy. So we give very good instructions on what they need to do. And really, it's one of those things: you deliver the policy, give them that information, they should be able to go out and do it on their own. If you feel like they need kind of some concierge help, we also have a concierge team that will call out to your client and help and offer to walk them through that kind of initial startup process. Here are the points levels, so you can see all the points that I mentioned, and at the end of the day, they're going to get 3,000 Vitality points just by doing this, and they're well on their way to gold. The other thing that they can do with all these rewards and discounts I mentioned, the Apple Watch, the free Fitbit, they have a permanent policy or a term policy over $2 million of face amount. We've partnered with Hyatt Hotels to give half off hotel stays. We've given cruise discounts up to 50% off cruise lines, and we do all these health checks. We have actually partnered with Walgreens and Quest Diagnostics. All they need to do is they go online, they book an appointment at Quest or at Walgreens, and John Hancock will pay for them to get those 4 biometrics done if they don't want to go to their own doctor. So a lot of different options. Again, we can certainly dive deeper into this at a later time. If someone has more questions, feel free to reach out to me, or obviously Mark and his team are very familiar with Vitality. But we just want to bring it up as this is a living benefit that we are seeing. Just a lot of our Vitality sales have really increased over the last couple years, and we're seeing that year to date, we've definitely surpassed our Vitality sales year over year. So we're very excited about this as well. Again, I mentioned the premium savings. Protection UL, which is the product that we're going to dive into a little bit deeper here on a couple of these next slides. On a 45-year-old preferred, this would be very similar premium savings that you would see, whether it's a 45, 55, 35, 20-year-old, whatever. We're going to see roughly 4 to 5% premium savings at the silver level. At the gold level, that's where we can expect to see anywhere from 10 to 12% premium savings. And then at the platinum level, we could see premium savings all the way up to about 14%. So over, the course of a lifetime, if we're looking at a 10 pay, that can be some really significant premiums that your clients are savings. And again, John Hancock, we feel like we should be just as motivated for your clients living a long, healthy, active lifestyle as really anyone else in their family. Again, it's a great fit for all your clients. The younger clients, those clients seem to just understand it. They get it. It's kind of how they've expected now to buy really anything that they purchased in their life, that they would be engaging on a regular basis. For the middle age and pre-retirement, again, these folks certainly understand the technology piece. That's typically not an issue. These are folks that have been early adopters for us. And then when you get into the older age, post-retirement, again, we're seeing more and more folks that really like this because they've actually got more time on their hands to do the workouts, to sit down, read about the material, kind of go through it. And obviously everyone across the board likes to get rewarded for things that most often times they're already doing a lot of this stuff anyway. Again, I touched on the Apple Watch. I'll give you a little bit more details as to how this works, but basically once your client signs up for the Vitality program, they can go in under rewards section of the website. They order their own Apple Watch. They pay $25 plus tax right out of the gate. We send them the watch. They hook it up to their app on their smartphone, the Vitality app, and then they're off and running. And that's going to keep track of their fitness goals now using the Apple Watch. And we put them on a monthly payment plan for 2 years. So my Apple Watch payment for my Vitality policy is $15.50 per month. But the great part about this is that every month that I reach my workout goals, or if I even get close to them, John Hancock will actually pay that payment for me. So you'll see my payment will grade down as I'm hitting my goals from an exercise perspective. My payment on my watch will go from $15.50, it'll grade down to $12, down to $7, and then ultimately down to $0 if I'm hitting all of my workout goals for the month. So John Hancock would actually make that full payment for me, so that theoretically, if I'm doing the amount of exercise that that my goals have set up for the course of the 2 years, I could technically have that Apple Watch for the $25 plus tax and nothing else out of pocket. So it's really a great thing, and it sounds kind of silly, but it really does help to motivate clients. I know it motivates me. My wife also has a policy, and we're always checking in with each other to see how we're doing on a monthly basis to see if we've paid off our Apple Watch or not. Okay, so that's our Vitality program, and I wanted to kind of tee things off with that because a couple of these examples that I'll use, we'll actually add Vitality to it. You can see, what the discount is on certain examples that I have here. But let's dive into the Protection UL, which this has been kind of our flagship product here at John Hancock for about six and a half years now since we announced it. And we really changed the game several years ago, about 6 years ago, with this product, because we raised the rates on our fully guaranteed universal life product, and we came out with this Protection UL product. And it's really been an industry leader in this low-cost death benefit space. So if you're looking, we typically will compete against fully guaranteed universal life, and we show this Protection UL product. And what it does is it really provides, first and foremost, typically lower cost than a fully guaranteed universal life product. And then on top of that, it really gives your clients a lot of flexibility because we do have very good cash value growth potential, whereas as most of you know, if you're selling fully guaranteed UL, those products will go to zero cash typically very, very quickly. So our product continues to grow cash, and that can give them either an exit strategy later on, 1035 capabilities. It's typically it might not be the last life insurance product that they ever buy, like it would be potentially with a fully guaranteed product. And then obviously we've got really lengthy guarantees in this product. We've guaranteed this product on an underlying basis really to life expectancy, and now we've actually even pushed that out with our latest repricing so that we can get, on most scenarios, we can get the guarantees to go to about age 90, and in some examples out to 95. But the beauty of this product is that it's really built, and you'll see as we get into some of these examples, it's really built to outperform those guarantees. Both, we have a Protection UL and a Protection SUL, and it is a current assumption product, and our current interest crediting rate is 4.95%. And we've held that, crediting rate of almost 5%, really since this product has been out. It started at about 5.2. We did have one drop to 5.05, and now we're at 4.95 in what's really been an all-time low interest rate environment, where we've seen other carriers drop current performance, current assumption crediting rates. We've seen them, drop a lot of their products. Even some companies have dropped products down to their minimum crediting rate, where we've been able to help sustain this 4.95. And really how we've done that is because for this Protection UL and Protection SUL, we've really taken a different investment approach in our general account. So we'll just kind of talk about that really quickly. Some people find this very interesting, and so I wanted to spend a few minutes on this. But really how we've done it is you can see that through this Protection UL product, we've still got a lot of bonds, corporate bonds, government bonds. So it's still a very conservative piece, but you'll notice that this blue section, about 10% of the portfolio, is in what we're calling alternative long duration assets. And so these are things that at John Hancock and at our parent company, Manulife, we've had anywhere from 25 to 30 years of investment history. And you can see how this breaks it down if we kind of dive a little bit deeper just into this alternative space. But it's where we're investing in corporate real estate, farmland, oil and gas, timber, private equity, and also power and infrastructure. And so these are areas that we've got a lot of experience. And again, anywhere from 10 to 30 years experience at Manulife covering, you can see just a wide array of different alternate and really long duration assets. So these are assets that are obviously institutional in scope. You or I, as just an individual investor, couldn't obviously get into some of these deals, but you'll see that, the real estate or private equity, the power and infrastructure. We've got some really neat stories of things that we're doing in this space. And quite frankly, what it's doing is it's keeping our portfolio that's backing this product and allowing us to really credit that 4.95 and that high interest rate in today's day and age, in today's low interest rate environment. So we're very happy about this portfolio. And so that's kind of the reason I just go into it a little bit. I mean, I'll spend a whole hour just on the portfolio and where we're investing. We've got some really great stories that kind of go, with each one of these different categories. I don't really have time today to dive into that, but if you'd like more information on that, Mark and his team can help, or we can get myself and some of our other folks involved to talk a little bit about it. And I really like talking about the underlying guarantee in this product as well, because as I mentioned, it was roughly a life expectancy guarantee. But you'll see that in our latest reprice, we've really come along and we've been able to push those underlying guarantees out really way past life expectancy. And you'll see that we can get almost everyone, whether you're 55, 65, 75, out past or to age 90 or beyond. And you can see in the older ages, we're getting that guarantee to go, to almost 94, 95 in a lot of situations. So that's something that I think is very, very competitive. We also do a great job, I think, of showing, hey, okay, what if the interest crediting rate, because it is a current assumption product, what if it were to drop from the 495 down to, 395 or even the guarantee minimum? And you'll see that, really we still get that full guarantee, the underlying guarantee out past life expectancy by 4 years, 8 years. And these are assuming that the day the contract is issued, we dropped it to the guaranteed minimum interest rate. So this truly is, I think, that as we get into some of these examples and as hopefully you're running and requesting some proposals, you can get into this product and you can look and see and understand that, wow, this really is a product that at the current assumption, so at a 4.95, it's really meant to outperform its guarantee, whereas the fully guaranteed products, that's really what you're going to be looking at as the guarantee. All right, so switching gears a little bit to our Protection IUL product. Again, our Protection IUL, we were one of the later carriers in the game, if you will, to get into the index space. But since we've done that, we've made it a point to have 3 index products, and all 3 are very, very competitive, including our protection-based product. You can see that oftentimes our Protection IUL offers the lowest premiums in the industry. So I think between the Protection UL and IUL, you've got some great options here for really looking at low-cost, death benefit-driven protection. we've tried to keep our portfolio on the index side as simple as possible, because we understand that, index products in general are not the simplest products out there. So all of our index crediting is based on annual point to point, and all of our options are S&P 500 with the exception of one, which is a Hang Seng option, which gives us some of that international presence that other carriers have. And then we really have 3 levels of guarantee protection in this product. So we've got, again, a lengthy no-lapse guarantee, which is going to perform very similar to our Protection UL guarantee. We have the zero floor, which is guaranteed in all of our index products, and then in all of the segments in our Protection IUL product. And then on surrender, we would have a 2% cumulative guarantee just for surrender purposes. We also have an index multiplier in this protection product, which kicks in the 6th year, and you can see that it's 25% in our capped account and 15% in all of our other index accounts. So a lot of carriers have started adding these multipliers. This product, no different from that. Year 6+, we have that multiplier. And I'm kind of going quickly through some of this information again. Definitely can answer some questions either after the call or on our own time. I do like to point out that we also have a persistency bonus to our fixed account, additional 65 basis points, and again, guarantees and obviously rolling targets on both our Protection UL and our Protection IUL products. Obviously, as you can read here, not available in New York for those of you that might be in New York. I'm just going to walk through, because we do have 6 different segments that you can choose from, and again, you can kind of pick and choose the different segments that that your client feels comfortable with. But I'm just going to throw all these up here just so you can kind of see them, and then I'll walk through them just real quickly. Obviously, we've got our fixed account crediting 4.6%. We have a capped account, which is just as it sounds, capped at 10%. No spread or anything on there, a 0 guaranteed floor, and that has the multiplier that I mentioned of 25%. Then we have our high par account, which anything between 0 and the current cap of 9%, we're going to just add on an additional 160% current participation rate. So my classic example there, if the S&P credits 5% and you're invested 100% in the high par account, we would credit then 8%. We would just go the 5% times 1.6. That's our formula, and you get an 8% credit in if you're 100% invested into the high par segments. Then we also have the uncapped account. No cap on that, so obviously you get full S&P or Hang Seng returns. However, we would take 6.5% of a spread, or we call it our current threshold rate of 6.5%. Again, you'll see on all of these the 0% floor. And then we have our Hang Seng, which again, annual point to point, just on the Hang Seng, cap of 13.5. Still a 0 floor on that. It does have the multiplier at the 15%. And then our plus cap account, just the only difference here is the clients are paying a 1% charge, and that's basically buying them an inflated cap of 13.75%. Again, 15% guaranteed multiplier, still a 0% floor on that one as well. But then you do have the 1% charge coming off. So again, we're really happy with the different segments. And again, if you wanted to say, hey, let's put 20% in the fixed account, 20% in the capped account, and then around the rest out 60% in the uncapped account, obviously you can do that, mix and match however you see fit for your client. Here's just a graphical example, really going from most conservative option getting to the more aggressive options. And we would start actually with the fixed account and then moving to the high par capped. As you can kind of see here, capped, Hang Seng, the plus capped, and then obviously the uncapped would be for those clients who are really optimistic about the marketplace. Okay. So with that being said, our Protection UL and Protection IUL offer, we think, great low-cost, death benefit-driven options. And on all of those products, permanent products, we can offer our long-term care rider. We can offer our vitality option as a rider, and then we can also offer our critical illness benefit rider. So I'll spend a little time now and kind of wrap up the call with our long-term care rider and also our critical illness benefit rider. Our long-term care rider, right now we're seeing it on about 35% of the cases that are sold with John Hancock have our long-term care rider. And As many of you know, we at John Hancock are now out of the, for the time being anyway, we're out of the individual long-term care marketplace. And so we've seen a little bit of an influx in our long-term care rider. So purchasing the life insurance, adding the long-term care rider. And there's a number of reasons for that. I mean, obviously, the convenience of just having one underwriting process. We do underwrite for both the life insurance portion and also the long-term care. But clients like the idea that, hey, they've got one affordable premium. The cost of this long-term care rider is guaranteed not to increase. We can't change the cost on that. And then ultimately, it's this whole idea of if I don't need the long-term care coverage, it's not a use it or lose it benefit. I still have that full benefit coming to us in the form of a tax-free death benefit to our beneficiaries. So clients oftentimes really like that. Now, I would say that, on our rider, there's some of the bells and whistles that you would get with a traditional policy, like inflation riders and some of those things are not available. But we do have some alternatives and things that we can do to kind of overcome some of those things. So our rider works. You can accelerate 1%, 2%, or 4% of the death benefit on a monthly basis. We always reduce the death benefit dollar for dollar. And then we have got basically a pro rata reduction to cash value. You'll notice as we talk about this, I just mentioned the inflation rider. Sometimes the way you get around that is you can add the 4% acceleration on there, because that's going to give you a little bit more monthly acceleration. And then therefore, 5, 10, 15, 20 years down the road, that higher amount will account for a little bit better, higher monthly acceleration amounts going towards for your client. Because we are a qualified long-term care, we actually have a maximum benefit amount of $50,000 per month, which is, I think, one of the highest in the industry. And so for those clients, we don't see that very often where they would buy that large of a policy and then put that much acceleration on it, but we can certainly do that. And we are reimbursement. So we do, instead of the indemnity version, we do our reimbursement. And because it's a reimbursement model, it's really not subject to any of the per diem limits of the IRS. So we've got the ability to accelerate up to $50,000, and all of that would be considered tax qualified for your clients. We also like the reimbursement basis because we're able to use and utilize provider pathways, which is a care advisory service that can it helps your clients and actually their immediate family members as well, if they needed it, to help them find qualified services in their specific area. So sometimes we get clients that are in really rural locations. They don't know where to go to find qualified services. So we can help find that. The other thing they can do is there's typically some negotiation that goes around pricing and how much the cost is for services, whether it's home health care or going into a nursing home or adult daycare. And provider pathways, because they're national in scope, and also because they've got a lot of experience in this marketplace, they can actually help negotiate those rates. They do have some buying power that can help your clients, negotiate some lower expenses and out of pocket, which everybody really appreciates that. We also have, when it goes to claim, what we call a long-term care coordinator, who's going to introduce themselves to you and your client and really kind of take on that bill paying burden. So as far as the reimbursement goes, we actually reimburse the facility directly. That's about 80 to 85% of our clients that are on claim actually want us to reimburse the facility directly. So we would reimburse up to that, whatever that maximum monthly benefit amount is, directly to the facility, therefore taking that whole bill paying and the paperwork, taking that burden off of your clients really altogether. So we kind of look at ours because it's the reimbursement, because we have provider pathways, because it's fully qualified long-term care reimbursement. There's no tax consequences to it. We really look at it as kind of the Cadillac and the turnkey approach. Not only that, but because it's reimbursement, typically it's going to be considerably less expensive when you add that rider on to our policies than, for example, a chronic illness rider that might be an indemnity version. Those are going to be typically more expensive than our long-term care rider. Okay. How it works is really very simple. How our long-term care rider works, it quite frankly just turns your death benefit into the long-term care benefit pool. And we also now have the option to, if you've got a larger life insurance policy that you sold, but the client doesn't need that full death benefit for a long-term care benefit pool, what we can do is you can come in and say, okay, let's say it's a $5 million death benefit, but we only need 50% of that, or maybe 10% of that for the long-term care. You can now do that so that your long-term care pool is reduced. Not only is that going to reduce the cost of that rider, but it's also just going to give them more, accurate long-term care pool to what they might really need, and they're not going to have to overpay for the ability to accelerate the whole life policy. Also helps us have that conversation around, hey, you really do need more life insurance, but for the long-term care piece of it, maybe we only need a portion of it to be accelerated. And so you pay the premiums, you got the life and the long-term care benefit pool. If you qualify, and the qualification for this is, I think it's pretty industry standard. It's 2 of 6 ADLs. We do have a 100-day elimination period, some of those things. But once they qualify and go on claim, we would just start accelerating that. We'd reimburse the facility directly. Any portion that was left over, again, it's dollar for dollar acceleration at 1%, 2%, or 4%. You would pick that at policy issue. And then any portion of that that's left over would just be paid in the form of a tax-free death benefit directly to the beneficiaries. Okay, so we've talked about a lot so far. So we've talked about, Protection UL and our IUL, very competitive products in our product portfolio. We've talked about Vitality and what that can bring to the table for your clients. Now we've talked about our long-term care rider and how clients can use that to accelerate their death benefit to help pay for long-term care costs. So let's just look at a couple examples. This is a female, 55. Again, you got to love home office examples, right? We seem to always kind of either use a 45 or 55-year-old, but it's just simple for us. This is a female, 55, preferred non-smoker, purchasing $1 million policy. And they purchased this policy so that it's going to actually endow it at lifetime. And again, got a nice underlying guarantee on this Protection UL product, crediting 4.95%. So really what we're calling the single would be just to buy the $1 million of coverage at a premium of $9,461. If we want to, really, I think, step up that coverage a little bit and go ahead and hit the double, we can look at the same death benefit, but now adding a long-term care rider onto there where they can accelerate that monthly benefit amount up to $20,000. So this is something where we're adding the 2% rider, which is typically our most common option that clients will choose. And you can see, though, that it does bump the premium up, and this is commissionable increase on the premium of up to $11,000, just over $11,000. But now if we add really the triple play, and we come in and we add also on top of that the Vitality option, where your client can engage with John Hancock, show us they're living a healthy and active lifestyle, that's going to save them premium dollars. And it really gets the premium down below what it would be with the long-term care rider, down to just over $10,000, so getting us, just $600 or so over the Protection UL premium. And we look at that and we say, you know what, this is a policy that it's going to cost this client $600 more for that policy, but really think of all the benefits they're getting now. Now they're getting all of the Vitality benefits. They're going to start engaging for us. They're going to hopefully really enjoy it, give you some referrals, but then on top of that, they've got this long-term care rider. It's a great way to kind of subsidize the cost of the long-term care rider, at least a portion of it in this example, and it really just gives them a powerful combination. We also think this gives you, as a producer, I just think this gives you so many more things to talk about. It's not just about their Protection UL death benefit anymore. Now we've changed the game. We're talking about things that we can do for them during their lifetime, not just at their death. So we're going to switch and talk finally and kind of wrap it up with our critical illness benefit rider. And this is something that's just come out here in the last few months. And I just wanted to spend a few minutes talking about it because, again, you talk about adding some of these living benefits. We can add this critical illness benefit rider with our long-term care rider, also with our Vitality option. And it can really, again, just add one more great thing to talk about with your clients. But it is available, as you can see, on our Protection UL and IUL, as well as our accumulation IUL product. You can see the issue ages. But what this critical illness rider does, not to be confused with chronic illness riders, which would be more like a long-term care solution, the critical illness rider will actually pay a one-time lump sum income tax-free benefit if your client is diagnosed with cancer, heart attack, stroke. You can see their coronary artery bypass graft, kidney failure, all kinds of other major organ failures, paralysis. And what this does is, really it's meant for during their working years, so up to age 65, if they were to come down with cancer, heart attack, we know that if that is to happen, and I'm sure everyone on the phone knows someone who has been diagnosed with cancer or a heart attack or has had a stroke before the age of 65, if you're in your prime working years, this can really affect either loss of income, or it could also affect, just out-of-pocket expenses like medical bills and all that. And this is really what this is for, to help kind of mitigate that risk. And this income tax-free benefit, the best part about it is it's above and beyond their death benefit. So if we do pay out on this, it does not reduce their death benefit at all. So they would still have their full death benefit, and if they had the long-term care rider as well, they would also keep their full long-term care pool available for later years in their life. So you can see that client chooses 10 or 25% of the policy's total face amount, and that is the amount that would be not accelerated. I'm sorry, it would just be paid out in a lump sum indemnity process. You can see here that the rider charge and everything terminates as far as the charges for the rider, either once we pay out the benefit or at age 65. Again, this is a commissionable rider as well, so it pays you to talk about it. And underwritten, there is some underwriting that goes along with this, but it's underwritten just as the long-term care rider would be at time of issue as you're going through the life insurance process. And it's available for risk classes standard and better, and then 150% and 175% as well. So let's take a look at another example. This is a male, male, age 55. And again, just kind of keeping in mind everything that we've talked about today, kind of now we're going to put it all together. This would be on our protection IUL policy. And now we've really said, okay, let's really take a look at not only the long-term care rider, not only the vitality benefit, but also the critical illness benefit rider, and see what kind of value we can bring for this client. So it's a $1 million death benefit purchased for, obviously, the beneficiary. Now we can add, you can see that the premium would go up just a little bit if we had this 10% critical illness benefit. And 10% would obviously give us $100,000. So in case cancer, diagnosed with cancer, they had a heart attack or stroke, they would have a lump sum, $100,000 that would just pay out tax-free, and it wouldn't affect either the death benefit or the long-term care pool at that point. By adding that, the premium goes from $10,700 up to $11,900 on this 55-year-old. And then we could add the 10% rider plus the 2% long-term care rider. We add both of those, the premium goes from $10,700 up to $12,800. But then here's where the great part of this comes into play. If we add that plus vitality, and we're assuming the gold status, so we're not going to even assume the bronze or the platinum status with the vitality rider, but we can basically get this to come back down from $12,800 down to $11,800 and help subsidize portion of that increase due to both the critical illness rider and the long-term care rider. So again, in the example that I showed earlier, this is very similar to that, in that we think that there's some real power, and this can really change the conversation for you and your clients talking about these different living benefits. Adding vitality is going to help reduce the cost for both our long-term care and our critical illness benefit rider. I included this chart just because I know sometimes people do get a little bit confused as far as, hey, okay, what is covered on the critical illness? What would be covered on the long-term care, and how do I qualify for those different benefits? We'll just start with the critical illness, and I'll just run through this real quickly because we've already covered most of it. But really, the 7 covered critical illness with cancer, heart attack, stroke. You can see the rest of them there, including major organ failure, kidney failure, that type of thing. Once one of those qualifying pieces would happen, they actually would get the lump sum 10 or 25% of the face amount one time, maximum benefit of up to $250,000. As opposed to the long-term care rider, it's more driven off of typical activities of daily living, and once you cannot perform 2 of the 6 activities of daily living, and then that benefit amount is either 1, 2, or 4% of the death benefit maximum LTC benefit amount is, again, as I mentioned, that $5 million or a $50,000 acceleration. You can see 100-day elimination period on that. The waiting period on the critical illness is just 30 calendar days from the date of issue. So really that's just to get around any diagnosis that might happen as soon as that policy was placed in force. And both are tax qualified benefits, so there wouldn't be any tax due. And you can see issue ages and then underwriting. Both are underwritten, as part of the life process on the critical illness, and then independently morbidity and mortality are underwritten on the long-term care rider. So we think the big differentiator for us in this space is really the fact that the critical illness is a separate benefit pool altogether. Most critical illness policies that you see, if they're associated with the death benefit, would reduce that death benefit, where that does not happen here at John Hancock. So we think that this is something we're obviously getting a lot of looks at this. We're starting to sell a lot of it. Again, it's pretty much brand new. We're approved in about 30 states right now. So I would take a look. We have a state approval chart, or I can help you with that. Obviously, Mark and his team can help you with that as well. So before you do run with this in your state, please make sure that the critical illness benefit rider is approved in your state. I know for a fact because you guys are located in Nebraska. It is approved in Nebraska. Some of the surrounding states are approved, some of them aren't. And then obviously, Mark, I know you guys are national in scope with the agency you work with, so please just check your state availability chart before we go showing this to clients. So with that, I think that's about all that I had to cover today. I hope that this has been helpful. Again, just kind of showing a portion of our targeted product portfolio, how it can work with both long-term care rider, with our critical illness benefit rider, and obviously with our vitality benefit. And hopefully this will help everyone on the phone understand those a little bit better. If we want to do a deeper dive on any of these subjects, I'm happy to do so. Obviously, Mark, I know your team is very much on top of all of these things, all things John Hancock, and we'll be able to answer any questions that come their way as well. But thank you again for not only the business, but thank you for the time today to have this conversation, and good selling to everyone on the phone. Mark, I'll throw it back your way.
Yeah, thanks, Chris. And we do have a question here from Jerry. He's asking if the long-term care rider is available in California.
Yeah, our long-term care rider is available in California. It's actually our newest version is not yet approved in California, but we do have our older version. There's just a couple things that are a little different on that, but it's a very competitive. And actually, I think of everything that I spoke of today, all of those benefits would be the same in California. So yeah, please take a look at our long-term care rider in California, and we can help run illustrations or get you up to speed on that. Thanks for the question.
Yep. And then Daniel was asking, I think on the Vitality, if you have to have an iPhone.
No, you do not. No, we have both iPhone, and it works with Android devices as well.
Good. Okay. All right. So if anybody else has any questions, please go ahead and type those in the question box while we have Chris on the phone here this morning. Otherwise, you can call our office, and if you need an illustration with the long-term care rider on there, you can certainly put it on there. And gosh, Chris, it looks like the question box is empty at this point. So again, this was recorded, so I will email this over to all of you so you have a good opportunity to review it anytime you want. And it's also going to be posted out on our website if you want to go out to www.imzing.com. You can go to webinars, you'll see recorded webinars. And in addition to that, you'll also see our schedule of webinars. So if you want to go ahead and register for any of them out there that are coming up, you can certainly do that. And another question that came in. So Jerry asked, what happens when taking income and then you need critical illness?
So when taking income and then you need critical illness. The critical illness rider, again, that goes through age 65, and that is independent of any acceleration of the death benefit. So I guess in your example specifically, if you're taking income out of the policy, then that will reduce the death benefit on a pro rata basis. So your death benefit would come down, just like with any other carrier. And then wherever that death benefit is at time of critical illness rider being paid out, then it would be that 10% or 25% of whatever that death benefit is. So that could reduce your critical illness benefit, but obviously, you've taken income as well. So it's kind of a give and take there, I guess.
Okay, perfect. All right. Well, our question box is empty. Chris, thanks again for helping us out here this morning, and thank you all for joining us. Again, I'll get this over to you here today. Otherwise, if you have any questions, call us at 800-255-5055. Thank you.
Thank you.